Good morning. Today is Monday, November 14th, 2022. Just 8 days, I guess, 8 business days before Thanksgiving now. And winter has hit. It is cold this morning. It's cold in the office, and it was very odd. It started at 66 degrees, 93% humidity on Saturday morning. And then by the evening, it was 30.
Yeah, it was
I mean, it hasn't gotten any warmer, it seemed, since that time. The Fed is in damage control here, and in a little bit of a reversal to what you would normally think damage control is, they are concerned that the market is getting up too much. And it's incredible. I don't know if it's cause and effect or what, but you have the market rally, you have a lower CPI report come in, and it just seems like the stores were busier. Driving around Costco this morning on Saturday, it was extremely difficult to find a spot. It's usually difficult to find a spot, but it was extremely difficult on Saturday. There are more people in the stores that I saw than has been for a while. It may have been weather related. It may have been related to other factors, but point being, I think people are shopping again. At least that's my perception. And there was a little bit of, whereas maybe 2 weeks ago, people would have been extremely concerned about what was going to happen in the economy, really trying to control their spending. It didn't seem like we saw a lot of that this weekend. And the Fed is responding to that. The Christopher Waller was interviewed over the weekend, and he says that there's still a long ways to go in terms of interest rate hikes. Tom, what are your thoughts on where the Fed is right now? Have they overplayed their hand in terms of being too dovish? And are people overreading this move toward 50 basis points and also the lower CPI?
honestly, I just don't think it's the Fed's fault. I don't think the Fed has really changed their tune that much. I mean, we remember how bad that day was when Jay Powell decided to go, fully into we're going to raise rates as far as we can, which is, I mean, it was only a couple of weeks ago. And then we got the CPI print, and suddenly everything the Fed has said for the last 6 months is out the window again. And so it's a lot, a little bit of a rehash of what we said last week, which is that, Waller, who is on the board, used to be the Fed chief in St. Louis, basically said the market seemed to get way out in front. I cannot stress this one data point, and we've still got a ways to go, which is, basically what he said is they set it up. The last meeting was to say, hey, we're going to step down and start doing 50 basis point rate hikes. But what we're not doing is stopping altogether. And I think that, we keep getting pulled into this trap. We've talked about it again and again and again on this call, but basically what he's saying is rates are going higher than you think they are. And we don't need to pretend like CPI is going to disappear overnight. He's like, basically something along the lines of it doesn't pop like a balloon, or a balloon doesn't pop slowly. So we can't just act like, inflation, which has been slowly ticking down over 6 months, is suddenly gone. And the 7.7% is still extraordinarily high, which is a lot of what we said last week. So, we would be looking to trim into some of these situations, looking to pull back on exposure, not get super aggressive in trying to reach on bonds the next couple of days when rates have dropped as much as they have in a single day in history, really. We need to be very specific about what we're doing, because odds are the Fed's going to come out. They're going to continue to raise rates. People are going to, suddenly be shocked and aghast that this is happening, even though the Fed has said is they're going to do it the whole time.
Yeah, and I think they're very concerned that we're going to have a similar situation to what happened over the summer. In fact, Waller actually said, following the loosening of financial conditions on Thursday that we talked about on this program on Friday, he said this is exactly the situation we had gotten into July. Back then, there was a loosening of financial conditions that we were trying not to do. And he says, when they came out with their FOMC statement in November, a few weeks ago, he said that we knew the markets were going to jump for joy, and we had to use the press conference to, quote, drive the point home that it's, to Tom's point, the ultimate level for rates that matters. And you're starting to see a bit of an impact of these hawkish comments into the market this morning. Although I think at this point, the market has its own belief, and it's not really paying attention. It's running with this narrative that the Fed is going to pause, whether or not the Fed says that. And essentially the market is fighting the Fed. And right now the market is more powerful. How long that sustains, I do not know.
Yeah, it's going to be an interesting couple of weeks. I mean, the rally seems to be continuing. My expectation is that we're probably going to have another, article that comes out. Fed chief board member says something that is, a little bit more of a splash. Waller's not exactly one of the biggest, most often quoted members of the Fed. We've got Bullard, I believe, on Thursday. Yeah. So that's the one I would be buckling up for. I would say, hey, get your trades in before Thursday. If you think the market's going to break one way or the other, it's probably going to break on Bullard because he's one that typically makes a splash, likes to say stuff that gets the market moving one way or the other. So, it might continue to run up, but I think that, that's going to be D-Day. What Bullard says later this week is going to be the big fulcrum point.
Elsewhere, OPEC Plus is dropping its demand outlook by 500,000 barrels per day for the fourth quarter. And I think they're basically setting the stage for what could be another cut in production on December 4th when they meet. So recall they cut by almost 2 million barrels last time they met. And it seems like they might cut production again, which should translate into higher oil prices. Now, they're saying they're doing it in response to demand because demand is lower. Which if that's the case, maybe oil doesn't go a ton higher, but I don't think that's the case. I think that oil demand hasn't really fallen all that much, and especially with China's reopening, I think that it's just going to continue. And therefore, I think that you'll just continue to see a tighter and tighter supply situation in the oil market.
I mean, these countries, they know what's happening. We're seeing a slowdown economically worldwide, and they're going to make hay while the sun is shining. They've got one asset, and that asset is oil, and they can make as much money as they want to right now. So they're going to.
Elsewhere, just wanted to bring this up quickly. President Biden and China's Xi Jinping actually did meet, and they did shake hands today, talking about cooperation, and they're going to cooperate fiercely, but in a respectable manner. At least that's what President Biden was saying. Again, I don't know how much you can read into that. I think that the panoply of tensions and actions probably speak louder than words at this moment, but we'll continue to watch what's going on there. As we look into the week ahead, we do have some earnings from retail companies. We have Home Depot and Walmart tomorrow morning. And then we have Target, Lowe's, TJ Maxx on Wednesday morning, Cisco and NVDA on Wednesday evening. And then on Thursday, we have some big investor days out of General Motors and Procter & Gamble, followed, of course, by Jim Bullard and Christine Lagarde finishing things out on Friday. Tom, as you look ahead to the week, what are you especially paying attention to, and what do you think the Fed's going to be paying attention to?
PPI is the big one for the Fed Tuesday. Just another read on inflation this side from the producer side. And then in terms of what I'm looking for is, if we see a number of CPI prints worldwide that are coming down, I think we're going to have a real pop this week. I mean, we've got UK, Eurozone, Japan, everybody's reporting their inflation numbers. And if we see inflation coming down elsewhere, we could be along for the ride, and in which case I think we should be very cognizant of where we're placing money and how we're letting stuff run, because I think it's going to be a little bit of an overplay. I think we're getting a head fake. I think everything Waller said is correct, is that, we've come down to 7.7, which if you printed that randomly, the whole world would collapse because everyone would be beside themselves with such a high number. But because it's not the high water mark, suddenly we're in the best economy ever. I guess markets should go up 5% a day. I think we're going to continue. I still think the terminal rate is above 6%, which would be many more hikes from where we are now. And, if that's the case, then I don't think we need to be jumping for joy. I think we need to be looking for opportunities in fixed income, sell-offs, things to be buying assets for people, that are generating income, a little more value oriented, getting away from the high growth stuff, clean companies, because those are the ones who are going to make through an interest rate hike environment.
On the earnings front, I think that we're probably going to have a relatively soft numbers from the retail companies, but expectations are very low for them. And I think that we probably had a pretty good start to the month of November and the Christmas season. So I do think that the evidence for some of these retailers may be a favorable immediate term setup. But again, I agree with Tom. I think that they'll probably talk about lower inflation. They'll probably talk about strong sales for the beginning of the holiday season. But I do think at the same time, you could see both of those factors flip as we get more data and as the economy continues to show evidence of elevated inflation and sticky inflation. So I'm really curious to see where all those end up. We will be talking about Home Depot and Walmart tomorrow morning, as well as United States PPI. We also have Chinese industrial production coming out tonight. So that'll be interesting to watch, just to see to what degree they were shut down and to what degree they may now be reopening and setting up for higher demand going forward. So with that, it's a pretty light news day, but the rest of the week picks up for sure. Have a great day, stay warm, and we'll see you tomorrow.